Perhaps a lot of it already priced in?
Yeah, I think it's really just about sort of thinking we've got uncertainty, or rather that uncertainty has sort of been removed now for investors. And so local stocks, as you say, they're pretty much already priced in that income. You can see here the TAIEX, that's the line in white, and you can see that significant performance or outperformance we've seen versus the MSCI Asia Pacific Index, the line in blue, over the course of last year. So as you said, it's really about maintaining the status quo here. Goldman Sachs, one of those that we've been hearing that view from over the weekend as a reaction to the election result. If you change on now, take a look at what they're saying, because they're not really expecting any big changes to come through in economic, in cross-strait policy. Yes, they do expect geopolitical tensions with China to persist, but given they were already elevated, we've heard that willingness perhaps from the DPP to engage.
No. Typical data center really.
Other investments abroad off the island, and also that Taiwan is going to continue decoupling from China, given the US is still the biggest client of export orders. Sherry.
Right, Bill, we'll be watching that market open in Taiwan and the reaction to the elections. We have more to come on Daybreak Australia. This is Bloomberg.
Just because you used Workday to transform your business doesn't make you a rock star.
Europe's manufacturing powerhouse is breaking down. But can Germany adapt in an era where fundamental truths are tested and upturned, and innovation in new sectors is key to revival?
The German business model is being disrupted. If you revive its entrepreneurial spirit, there's huge potential to lead.
As the engine of Europe starts to stall, we ask, could deindustrialization open new doors?
I opened my restaurant because I love cooking, but I don't love cleaning greasy pots and pans. So I upgraded to Dawn Professional.
Dawn Professional manual pot and pan cuts grease faster.
Bon appetit.
From P&G Professional.
Major U.S. lenders wrote off more of their commercial property loans as remote work and higher interest rates pummel valuations of office space. According to earnings releases, net charge-offs at Bank of America and Wells Fargo rose during the fourth quarter, partly due to office loans. Bloomberg has learned that Apple is shutting its 121-person AI team in San Diego, leaving many employees at risk of dismissal. Sources say the group has until the end of February to decide whether they want to relocate to Austin, where they would merge with the Texas portion of the same team. The AI unit is responsible for improving Apple's smart assistant, Siri. BlackRock has agreed to buy Global Infrastructure Partners for about $12.5 billion. The move vaults the world's biggest money manager into the top ranks of investors that make long-term bets on energy, transportation, as well as digital infrastructure. BlackRock will pay $3 billion of cash and about 12 million shares. The deal is expected to close in the third quarter. Now, BlackRock clients jumped into the firm's long-term funds in the fourth quarter, helping push the firm's total assets to over $10 trillion. But BlackRock CEO Larry Fink also told us there are still signs of uncertainty in the market.
I can't control one quarter or another, and we had an incredible quarter. But the fact that stands out for me is over 5 years, clients rewarded BlackRock with $1.9 trillion. This is not market movement. This is how much new money we receive from clients worldwide. Clients have, over the long run, have great needs to put money to work. We advocate only long-term strategies. We advocate that you need to be in the market. You can't be in and out of the market. If you're looking to do that, there are many venues where you could be doing that. We are trying to help people build retirement savings. We want people to have a life in retirement with dignity. We spend so much time in our world talking about how we could have healthier lives, but we spend no time focusing on, can we afford that longevity? And BlackRock is a firm that tries to provide that type of long-termism. I do believe we spend a great deal of time talking about hope in a world today where we have greater hatred and greater fear. I think there are many opportunities to think about, despite all those issues, that long-term investing is the way to go. And I believe, you know, at the moment right now we have trillions of dollars money sitting in a money market funds. And so that's just an indication of fear. We have more money sitting in bank balance sheets right now in deposits. That's an indication of fear or uncertainty. And I do believe one of the greatest differentials between U.S. and any country in the world is the strength of the U.S. capital markets. And this is something that we at BlackRock betted on years and years ago that we believe in. And so over time, we believe the opportunity to invest in our economy, investing in our companies, and at times when you want to have a more global view, investing in the world, over a long run, you're going to outperform any bank deposit, you're going to outperform any money market fund, and it's our job to provide the appropriate investments for our clients so they can have that life with dignity.
The form that those investments are taking is changing, and you also announced a sort of a new architecture, I guess is what you're calling it, for BlackRock, really pushing on to ETFs. You've had a lot of success with iShares already. It's grown. It looks like you're doubling down on that. Explain that move into ETFs. How far does it go?
When we bought BGI in 2009, we were ridiculed by most of the financial community for saying you cannot marry the culture of an active investor, who we were, and a passive culture. And we said, why? Our clients use both products. Our job is to be agnostic to our clients, to work with our clients, to provide a whole portfolio solution. But over time, more and more clients started to think about, how do I want to get an exposure? Do I want an exposure in this area or this product? And I could do that through actively investing in ETFs. In 2012, we said, ETFs are going to be the new engine for fixed income. And boy, did that get a lot of ridicule by many people in the business community. And today, the fixed income markets are totally imbued by ETFs. And so at BlackRock, when we bought BGI, we had $290 billion of ETFs. Today, we have $3.5 trillion.
BlackRock CEO Larry Fink speaking with Bloomberg's David Weston. And if you missed any part of that conversation, TV Go is your function. You can watch past interviews, also watch us live. You can dive into any of the securities or Bloomberg functions that we talk about. Also become part of the conversation by sending us instant messages during our shows. This is for terminal subscribers only. Check it out at TV Go. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
You're watching Daybreak Australia. The surprise decline in U.S. producer prices last week reinforced bets on Fed rate cuts this year. That data came a day after a hotter than expected CPI reading as well. Bloomberg opinion columnist Mohamed El-Erian is expecting U.S. CPI to get stuck at 3% due to fresh cost push pressures. He also told us why he sees growth risks ahead for the U.S. and other major economies.
My major concern is that if you look at the three systemically important regions in the world, economically, the Eurozone, the US, and China, all three are having issues growing in a robust manner. The US is the exception there, but even the US now is facing lower household savings, higher debt. China needs to fundamentally change its economic models. And we know that without a healthy Germany, Europe is going to struggle. So if you actually look at who is the locomotive of growth, it's very hard to point to one locomotive. It's hard to believe that the US will be able to maintain what was very impressive growth rates. Now, put on top of that the geopolitical concerns, and that's why this recency bias, where people simply extrapolate what was a surprisingly good year from last year, is something that we have to guard against.
So you're questioning the resilient growth story. Are you also questioning the disinflationary trends, Mohamed, that have started to develop over the last 12 months?
Yeah, I smiled when I heard the conversation before I came on, that, it's disinflation ahead. It's not. We're going to see, and we already are seeing, cost push pressures in the pipeline. There's two in particular. What's happened to navigation in the Red Sea is directly and indirectly increasing inflationary pressures, directly by hiking input prices, indirectly by causing shortages that then influence other prices. And then we have the labor market issue. We have higher labor costs coming through the pipeline. So you've got cost push pressures coming in. I suspect we will see inflation at the CPI level get stuck at 3%. And then the Fed is going to have to make a difficult decision, either tolerate it for longer. And I was encouraged by John Williams' use of the word, a longer term inflation target is 2%. Or try to reduce it to 2% too quickly and risk the real economy. But this notion that immaculate disinflation is going to continue is something that I find very hard to reconcile with actual data.
Let's finish on Fed policy. Expectations, they go in March. What's your gauge of what the threshold is to begin to reduce interest rates, and how close do you think we are to it?
There's no reason they should go in March. I think the market is over-optimistic, both in terms of timing and in terms of the amount of cuts we're going to get. I think the market should listen to the Fed when it says signals around 325 basis point cuts and starting later than March. I think it'll be the summer when they start.
Bloomberg opinion columnist and University of Cambridge Queen's College President Mohamed El-Erian speaking to Bloomberg's Jonathan Farrow. And it's that time of year again. We have economic, financial, and business leaders gathering in Switzerland for the World Economic Forum. The theme this time is rebuilding trust. Here's a look at the main issues set to dominate discussions.
White alpine mountains, billionaires, and the global elite. It can only be Davos, the tiny ski resort in Switzerland, home to the annual meeting of the World Economic Forum. Here are three key topics high on the agenda.
Number one, a dovish pivot.
Despite all the talk of higher for longer, sticky inflation, and robust labor markets, investors are now pricing in aggressive rate cuts by key central banks this year. Following the cost of living crisis and the unprecedented cycle of global monetary tightening, reduced borrowing costs cannot come soon enough for debt-strapped companies and governments. And the next crucial question is whether policymakers can make the pivot to avoid a hard economic landing.
2. Rising geopolitical pressure.
World leaders were already grappling with the Russian invasion of Ukraine, launched by Putin's forces nearly 2 years ago. The much-anticipated counteroffensive by Kyiv hasn't quite gone to plan, and foreign support and military aid is not flowing as freely. There's now also a second conflict on the global stage between Israel and Hamas. The humanitarian cost has been immense, and the war has the potential to spark wider tensions across the Middle East with ramifications for global trade.
And 3, just 2 letters, AI.
Investors are obsessed with its potential to disrupt chunks of the economy, and it drove some of the biggest stock market gains last year. Pressure is now mounting on tech companies to deliver on some of the earnings hope. And in the hallways of power, security, and ethical concerns remain. The EU struck a landmark agreement to regulate artificial intelligence, and it could set the tone for similar rules by governments across the globe.
Of course, Davos draws a lot of criticism as being exclusive and out of touch with reality. But key politicians and industry titans continue to go in droves. And as long as they do, the buzz will remain, along with the potential for meaningful change.
Bloomberg's Francine Lacqua there with a preview of what to expect in Davos. Coming up in the next hour, Oxford Economics shares their outlook on China's economy ahead of this week's major data releases, of course. Then the Insights also tells us why the oil supply-demand outlook remains bearish. We had a little bit of upside when it came to oil prices, given the U.S. and its allies launching airstrikes against Houthi rebels in Yemen. That's it for Daybreak Australia. Daybreak Asia is next. This is Bloomberg.